afternoon. Shares in the Asian region were mixed, with Chinese stocks amongst the biggest losers regionally. Hong Kong's Hang Seng Index also fell 0.7% as of its final hour of trading, with Chinese tech stocks in the city dropping. Market sentiment on China's stocks may have taken a hit after the U.S. Commerce Department said it had added 33 Chinese entities to a red flag export list. Elsewhere, Japan's Nikkei gained 0.1%. European stocks were cautiously higher, with global investors looking ahead to U.S. inflation data released later this week. To dissect the markets for us even further, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. So you have the Asian markets having a mixed performance, European markets having a bit of a cautious start. How is our markets interpreting all of that movement with the lack of a catalyst to drive markets further?
Good day to you and to the listeners. Yes, we had a very good start. At some point, the local market was up 1%, and it just shows you that we are getting our gains from our industrial resources part. Bear in mind that as it is now, markets, I think, they've factored in that so far what has been happening. Yes, we know we had a bumpy start to the year, even though up to date the JSE is up almost 2.7%. But most of the risk probably has been priced into asset prices. And truth be told, that this kind of market, which is a bull market, occurrences like having some form of a correction or having something like that, that should be healthy and a common occurrence when it comes to the bull markets.
So let's talk in terms of news that came out earlier on SENS. We had Sasol releasing a trading update. That share price is down almost 0.5%, and they described their half-year performance as mixed. What was your interpretation of their estimates in terms of what they're expecting for the half-year?
Mixed indeed, and yes, we know that the guys, they still have some legs to run on going forward, especially if you look at the results that we got as well from BP, which managed to go up and swing into profits after 8 years. It shows you that if it was not a question of operational challenges that we had back here home that affected their production, which was low, if it was not because of the low sales volumes when it comes to the chemicals and energy, the guys could have done well. And yes, we've seen that there was a strong recovery when it comes to Brent crude. We've seen that they've just seen an improvement when it comes to refining margins, and also when it comes to chemical prices, but because of low production, then unfortunately that was affected. And also look at their profits as headline earnings per share. They're expected to go down by 26%, but we know that they've been weighed down mainly by accounting adjustments and also the issue about coal. But look at their core headline earnings per share. They should be going up by almost 191%.
Right. So we had Telkom releasing their trading statement yesterday, and the share price yesterday was down 7%. Today, it's down about 0.7%. And when you look in terms of the figures that they brought out, their mobile revenue growth looking pedestrian in the last quarter. The market didn't like this trading statement. So what other aspects spooked the market when it comes to this one?
Remember, this is a quarter where you expect people to make or have more numbers when it comes to mobile customers, because that's the quarter that falls into the festive season. And secondly, we are looking at Telkom, comparing it with the likes of MTN and Vodacom. We've seen their results were very good, continuing to acquire some of the assets in Africa, continuing to expand when it comes to their mobile money. So that is what is lacking when it comes to the likes of Telkom. Yes, we know that when it comes to connectivity, we are home to fiber has been improving. They've even connected more homes going forward. And yes, but they still lack on the part that when it comes to mobile money, it's something that they need to improve on. Yes, we are all happy that the guys will unlock some value, and they should be listing separately the likes of Swift and Net. But as it is now, when you compare it with the other two big boys, then you see that Telkom is not doing that great.
Let's take a look at global markets then. What do you make of some of the influences weighing on sentiment right now? For you, what's the biggest influence?
For me, the biggest influence which the market is continuing to ignore continues to be that tension which is escalating between the US and Russia. And we've even seen that the hawkishness that has come from central banks as well, inflation continues to be a problem. But I think the fact that ECB president continues to downplay the issue about inflation, even though we're waiting for inflation numbers that comes from the US on Thursday, maybe that is giving markets reasons not to worry that much. And also we know that this tension, if it continues, then definitely it's going to have a serious impact when it comes to oil prices, and then automatically that will even affect your inflation, which will also make central banks to start increasing interest rates rapidly.
So we're still in earnings season on the US side of things. What companies are you keeping an eye on that are releasing numbers this week?
We'll be watching for Coca-Cola, and for the fact that we've seen that so far twice they've readjusted their forecast, expecting more volumes. And we know that every time you get some relaxation when it comes to restrictions, then demand of Coca-Cola continues to be there, whether it's restaurants, whether it's for movie theater, stuff like that. And yes, we expect to see at least earnings per share of almost 0.4 cents compared to the reported ones in the same quarter of 0.47 cents per share.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers talking to us about his perspective on the markets. And he did touch on that oil price right now falling from a 7-year high ahead of the US-Iran talks. A deal between the two countries could allow more than 1 million barrels a day of Iranian oil back onto the market.